Chris is saying we have owned TM29 and TM83 for about 5 years now and are thinking about replacing them with their corresponding ETFs. The mutual funds usually pay out dividends and capital gains around December 21st of each year. If we sell them now, do we forfeit the dividends or capital gains? We use the 55 to 65 stock investment model. And is this long-term money? This is long-term money, he's saying. Do you think this is a good move? What do you think, Shanna? He doesn't mention his specific age, by the way.
Yeah, I would stay where you are. If you got into the mutual funds, it's likely that you paid a commission to do that. Mutual funds are designed to be a long-term investment, so you'll kind of forfeit your cost savings by shifting into the ETFs. I don't think there's really a great reason to do that. And yes, you are correct. I'm glad you brought that up about the capital gains distributions. The Timothy distributions this year will happen on December the 9th. So here shortly. And one of the funds that you mentioned there is getting a capital gains distribution of over $1 per share. So definitely stay put at least until that time. But what typically happens after a mutual fund pays its capital gains distribution at the end of the year is that the very next trading day, they start to trade what's called ex-dividend, and the price drops to offset the distribution that went out. So even if it weren't the end of the year, I would still tell you to stay put. The two things that you're talking about are enough similar that you don't really need to go from one to the other.